Hey folks, Dan Frio here, the rate update. Today is November 8th, 2021. I'm going to go over what mortgage rates did today. I'm going to recap where we finished off Friday, and what the Federal Reserve did last week was brilliant, and that was what we're going to talk about. So don't go away. We'll be right back. Okay, so folks, the first thing I want to explain to you guys is the Federal Reserve does not control mortgage rates. Okay, they have two mandates that their focus is in on, or why Congress actually created them. And I'm going to go over that in a second. But I want to just explain to you guys what Federal Reserve Chairman Powell did on, I think it was last Friday or Thursday when he did this video. It's genius. And then when we come back, I'm going to explain what he did and how that affected the market and why it avoided a huge crash. So take it away.
Hi, Nick Timmeros of the Wall Street Journal. Chair Powell, the markets anticipate you will raise rates once or twice next year. Are they wrong?
So I would say it this way. We try to focus on what we can control, and that is how to communicate as clearly as possible in this highly uncertain world how we're thinking about the economic outlook and the balance of risks, and how policy will evolve in that case, and also in the cases which are frequent where the economy evolves in unexpected ways. So the focus at this meeting is on tapering asset purchases, not on raising rates. It is time to taper, we think, because the economy has achieved substantial further progress toward our goals, measured from last December. We don't think it's time yet to raise interest rates. There is still ground to cover to reach maximum employment, both in terms of employment and in terms of participation. Getting to your question, our baseline expectation is that supply bottlenecks and shortages will persist well into next year, and elevated inflation as well. And that as the pandemic subsides, supply chain bottlenecks will abate and job growth will move back up. And as that happens, inflation will decline from today's elevated levels. Of course, the timing of that is highly uncertain, but certainly we should see inflation moving down by the second or third quarter. The time for lifting rates and beginning to remove accommodation will depend on the path of the economy. We think we can be patient. If a response is called for, we will not hesitate. So what I will tell you is we're watching carefully to see whether the economy evolves in line with our expectations, and policy will adapt appropriately. And that's what I would say.
Okay, so what the Federal Reserve, he just came out and said was, I hope you caught it. He didn't say when they're going to raise rates. He basically said, we're going to taper. We're going to taper for about 2 months, and that's what they're going to do. Then we're going to reevaluate it. He didn't say it in those words, but that's what they're going to do. And that's what all the verbiage of everything that he said comes out to be. So the stock market liked it because they're like, okay, they're going to step in and do whatever's needed to keep everything elevated in the stock market. The housing market and the mortgage rates are like, okay, we'll take that, because if things get really bad, they're just going to stop tapering and maybe even add to it. Who knows? That's the genius behind all this. Just keep everybody guessing to the positive. So let's dig in on some things so I can explain it to you. Chairman Powell on the Federal raising rates plan. That's what we just watched. But let me explain to you some of the news coming out right now. Federal officials turn focus to rate debate, eye on jobs and inflation. Okay, why jobs and inflation? Well, Congress created the Fed years ago, in the 1940s actually, and gave them two mandates. It was basically price stability, and they came out and said, we want you to keep inflation at a check at 2%, or do anything and everything you can to do that, and then help the economy get to full employment. What that is, it's kind of a number that you can't really put a specific on, but to basically keep the economy as employed as people want to be, because not all people want to work. Okay, so that's that part of it. And then the next thing is, you can see after that happened, is mortgage rates dropped for the first time in weeks, and sub threes might even be back in play. All right, so that being said, how did the markets react to all this? Well, if we go back, let's look at Friday's close. All right, here's where we are. All right here, this huge green candlestick. Okay, I hope you see it. That's a big move up, guys. Look at the last 2 weeks. Look at this rally. All right. So everybody's freaking out when they came back here, inflation and this and jobs and everything, and it just crashed. I said it overreacted, and it did. Should rates be higher? In a normal economy, they would be, and they would have been. But it's not a normal economy. We're still seeing the repercussions of the COVID virus, the Delta variant. And when you have the whole world shut down for a year, 2 years, 18 months, you're not going to flick a button and everything just go back to normal. It took us a year and a half or 2 years to get to here. It's going to take another year and everything kind of to dissipate out of the economy. And a lot of the free money that was out there and the extended benefits and then you don't have to make payments on certain things, all that helped. It did help. But now it's all starting to go backwards and we're going to get back to normal, whatever normal is, in about a year. Okay, might be a year and a half. So everybody's freaking. Calm down. All right, let's leave it at that. So we had a nice little reprieve here. And again, I give kudos to the Federal Reserve. Now, are they kicking the can down the street? Are they going to do the whatever? I don't know. In time, we'll see. Here's what my feelings are on all this. And I've been saying this for a year. Inflation, I'm pretty sure it's going to come back in check. Now, will it come all the way back down? Nah, because there's wage inflation. Because there's a lot of employers now that are saying, I'll pay you whatever I need to get you back to work. Well, unfortunately, when you go do that and you bring somebody to work, you can't go a year later and say, we're going to cut your pay. It doesn't work that way. So wage inflation is going to be there. A lot of things, a lot of other pieces of the economy are going to start to dissipate. And we're going to have used car sales. Well, as soon as semiconductors kind of get back online and back to normal, you're going to have new car sales being produced, allowing used car sales to kind of plummet back to the values where they were. Same thing with housing. You had a huge glut of houses, nothing on the market because people forbeared their mortgages. So if you're not making a mortgage payment and you're reluctant on what your job's going to be, you're not going to sell your house because you're not even making a mortgage payment. So a lot of people didn't put their houses on the market. You had a lot of companies like Zillow and corporations and hedge funds jumping in, buying up the housing market. So you already had a limited base of housing. And then you had, that's what caused a huge uptick in the housing prices. We're going to start seeing that dissipate. Zillow's out of the business, as we heard. They're going to start throwing back on all the properties that they still own, and they're going to stop their bidding wars. That's going to help. You have the economy getting back to normal. You have people now getting out of the forbearances, and they're going to have to make a mortgage payment. Then they're going to have to decide, do I want to stay here? Do I want to downsize? Do I want to upsize? Whatever. I'm expecting 500,000, maybe 800,000 homes to come in the market in the first quarter of 2022. So you have all these things working for you, and that's where I think we're going to be. So that's my analysis of the economy and where we're heading. So let's get back to the charts. Right now we had this. Now I think this is overdone as well. I think we should be trading in about this range right through here, 102.8, in this range right through here, and only time will tell. A lot of people were overbuying this market. They oversold it here and so forth. So you see what's going on there. Economic calendar for this week. Federal Chairman Powell came out and spoke. I can't find these articles, so I'm looking like a Dickens for those. But this week is all on the inflation front. We're looking at the producer price index and the consumer price index. This is on the producer side to see what the inflation looks like there, and this is on the consumer side. Then on Wednesday, we're going to have the continued jobless claims and initial jobless claims. So this week alone, between Tuesday and Wednesday, summarizes everything that the Federal Reserve is created for. It's inflation and jobs. Okay, you see that. Now, where are rates right now? This takes into consideration Friday, nothing yet for today, and it's not a very good day. You can see the MBSs are down 9. But guys, we picked up this much. I mean, look at this. This was Friday, Thursday, Wednesday, Tuesday, Monday. Since Monday, we went from here, 102.6, all the way up to 103.4, and wherever we are right now, 103.23. So that's a nice rally, guys. That's a big rally right there. So you're probably going to see a little bit of profit taking as well. We went over the economic calendar. Now, where are rates? Again, these aren't baked in yet. What would happen today? But you can see where the 30-year rates are, 15 FHA jumbo and 5-year. So right now we are at 309. Again, we're not seeing the twos in the 30 years, but we're getting darn close. So that's down 3 basis points. The 15-year is down 2 basis points from Friday. FHA is down 7 basis points. Jumbo's down 5 basis points, and the 5-year moved a whopping 12 basis points. So that's where we are today. If you're in the process of getting a mortgage right now, or you're looking to get pre-approved, or you're looking to build, or you want to consolidate, or you want to put on an addition, and you're like, now what? Guys, reach out to us. That's what we're here for. We're here to be your mortgage consultant. Can we get you a better rate and terms than you're getting now? Well, if you're in the mortgage process right now, I'm going to show you how you can send us your information. But if you're not yet in that already applied for a loan, I'm going to show you where to go and how to find out more about me and my team. Either way you do this, you're going to go to therateupdate.com. That is right here. If you're in the mortgage process already and you're like, Dan, can you review this? Can you get me better? Because we just saw in the last week, again, when this number goes up, rates come down. So you can see that over the past week, rates have come down. So if you already got your loan estimate from your lender, what they have to do is they have to send you a loan estimate within 3 days of pulling your credit. It goes over the rates, the terms, every penny of cost that they're charging you. If you have that, please send it to me. Let me review it for you for free. You go to therateupdate.com under resources. There's an upload your loan estimate tab. You click that. You click here. You fill out a little information. If you would, under the message section, tell me a little bit about what you're doing and give me your credit score so I know what's going on. All right. And then upload your loan estimate right into here. Within an hour, I'll get back with you with hopefully some great news. But if you're in the process or you're in the thought process of doing this, how do you reach out to us to get assistance right from the beginning? 2 ways, actually 3 ways. Give us a call, 844-775-LOAN. Schedule a meeting. You can click here, schedule a day and time that meets your needs, and we'll be there at that time with you either by phone or Zillow. Not Zillow, Zoom. I got Zillow in my mind right now. Or the next thing is we have a state-of-the-art application process. You can click here, start your application immediately, and as soon as you're done, it'll alert me that you uploaded your application and you got it started. I will review that and get right with you to answer any and all questions that you have. So thanks so much for watching, guys. I'm going to come back with a video later this afternoon to explain what Zillow did, how you might want to avoid that, and how them getting out of the market is going to help us easier for all of us to get our housing bids accepted. So that's it for today, guys. Not today, but that's it for the morning. I'll be back later this afternoon. So God bless. Thanks for watching. Please don't forget to give me a thumbs up, subscribe down below, hit the bell every time I post a video. You get an alert. I'll see you around 4 or 5 o'clock today. Bye-bye.